I know specifically there are lots of traders out there who possibly are looking to fund a small account. And you know by now that you can't immediately grow a small account into something large overnight. It's going to take time to compound that account to be able to watch it grow. So maybe you have $500 you're looking to put into an account, or maybe even $1,000. But you have to understand when it comes to trading the micros, because this is what we're talking about specifically today. Is it possible to make a certain amount of money daily to grow that account? If you have the goal, just thinking, from a smart basis of making or earning at least not 1,000, but let's say $100 a day, okay, to grow that account. So let's say you put $500 in your account. Now, if you can make $100 a day, then you've grown that account from what by the end of the week, from $500 to say $1,000, correct? So that's 100% 100% investment. So a 100% ROI on what you initially started with. Now, I'm not going to sit here and tell you right now, please stop before you just start funding a personal account to start trading live. Make sure that you understand the proper way to be able to trade, understand market structure, understand how to read price action, understand the tools that you're using so you can trade them properly. That's the important thing. Like I'm using Ninjatrader. It's the platform of choice in which I use. And I'm going to show you just a few examples on the chart. And I've showed this in lots of videos, even in trade breakdown videos, when it comes to structure of the market and zones that we're looking to actually take interest in, or I am to trade. It's all about, for me, marking up higher base charts and then moving down to my lower base chart. But this video is about, getting paid or trying to make at least $100 a day on a small account and compounding to watch that account size grow so that you can trade more lot sizes, okay, or higher lot sizes or more contracts to be able to, maybe start trading the E-minis. I believe it's most traders' goal at some point to trade or move from the micros to the E-minis. And maybe you want to stick and stay with the micros and just trade larger lot sizes. But, everyone's choice and preference is going to be different. But what I want to share with you today to let you know that it is possible, okay? Trading is not gambling. It is a real full-time business and what you can do. But the thing about it is to simply, start small and grow, okay? Don't start dumping a bunch of money into an account and then expecting a quick return overnight. You got to understand, as a beginner, you need to take steps, all right? Proving consistency to yourself, proving that you can be patient enough to wait for the right setups. This is why I like using a higher base chart, because I'm not in and out of trades. When you start really scaling down and fine-tuning or moving down to lower base charts and trying to scalp that way, it's going to be harder because, for one, you can't see the broader picture, okay? So you're going to be thinking that everything that looks like an appetizing supply or demand setup, you're going to take it. Waiting patiently for bigger moves on higher time frame charts or higher base charts is the best thing to do, because you're waiting for a move for the market to pull back to a key area on a higher base chart that you can definitely see the structure of the market, be able to read the structure of the market, and waiting for the pullback and then execute when you move down to a lower base chart looking for the strategy to unfold. So if we take a look at this chart right here, which is my higher time frame or higher base 120 range chart, I see structure being broken to the upside. So that's, trading one-on-one, being able to read and understand what's going on the charts. If structure is being broken to the upside, then you should have a bias to only be looking for positions to go long, all right? Not, trading against the grain, or what most traders will call, or myself even, counter trend trading, okay? Not to say you can't, but if you go back and back test counter trend setups, you're going to find that those type of setups don't work as well. You're going to have a higher probably losing rate, all right, and your win rate is going to be very low in comparison to taking trades with the flow of the market, all right? So having when you know the structure breaks to the upside and waiting for pullbacks as the market is moving higher, pullbacks to key areas of demand, and then look for opportunities to go long. Just like right here, where we see the market start to pull back here, but then it turns back around and it starts to break structure back to the upside. Now, we want to wait to see what's going to happen and have zones marked off on our charts. This was, say for example, a zone right here, but the market pushed right through it. Okay, if you scale down to a lower base chart, you're not probably going to see what is a great setup because, well, first and foremost, the market wasn't probably reacting at this zone right here. All right, and plus this was probably, if you look at it, this is a leg back to the upside where the market is breaking structure. And I talk about in lots of videos setups or areas where the origination of the move started from. It started here, and then you get the first break of structure, and then a second one. All right, so if you have high probability setups resting below, maybe not the first one. Okay, this could be a better opportunity, or this could be a better opportunity, but it's all about rejection. All right, and one thing I love to really see is that what helps me kind of filter out which areas as well to possibly look for setups. So if I have multiple zones, one here, one down here, well, what I want to see is that when the market comes to the first zone, did it react at the zone? And if it did it make a new high? If it didn't, okay, make a new high, but it did react here, I'm going to be very questionable about the next area resting below because we didn't make a new high. It may react here, slightly push up, and then break lower to where they want to continue pushing at this point lower to take out this major area structure right here, this low below, okay? So pay attention to what the market is actually showing you. Be able to read the flow of what's going on. Did it make a new high at the reacting right here at this high probability demand zone right here? If it didn't, then it comes down and tests here. Be very cautious because it may be trying to set itself up to continue pushing lower. So even though this is a chart of the E-mini, the NQ, okay, I'm talking about the micros because you kind of see the same movement of what's going on the E-minis. And if you switch over to a micro chart, about the same. Sometimes you will see slight variations where the setups may not look the actual same, but still, I mean, just focus in on what I'm trying to say today. Just using the E-mini chart, just here to say that this could be any particular chart. Just focus, just think as if this was a E-mini chart. A micro chart. Even though we're looking here at the full-on E-mini NQ. Okay, so for example, here's what I'm trying to say is the goal is to try to take or make at least $100 a day, right? To get paid that amount or earn that amount. $500 on what you started in opening your account with, okay? So the first week you're making $100 per day. By the end of the week, that account size has grown from 500 to 1,000, and then week 2 from 1,000 to 1,500, and then week 3 from 15 to say 2,000, okay? So you are increasing the size of your account over time, all right? And at some point you'll be able to take small amounts of withdrawals out of the account. But this is for someone that's looking to trade in the micros and starting with that, initial $500 and looking to grow it $100 on the day. And it's really easy to do because if you can capture 20 plus points in the market a day, if you capture 20 points, that's 80 ticks on one trade. Trading 2 contracts, then that's going to put you at $80. But typically, you're probably going to make a little bit more than 20 points, especially if you're someone that stays in the market, meaning taking most of the position off. So if you trade with 2 contracts, maybe 1 contract off at 20, allowing the last contract to be a not trailing, but to be a runner to where you're trailing behind it. And as it continues pushing up or down in your intended direction, you're able to capitalize on more profit. That's the key to it. Is anyone out there that's trading multiple contracts, takes most of your position off at maybe 20 points or maybe at 1-to-1, okay? Whatever it is that you are, your goal of is reaching your first goal of where you want to take most of the position off at, all right? Most times, 95% or more of times when I'm trading the Nasdaq, I'm looking for at least a 20-point run and either close the trade. But one thing I'm working on really is to try to, and I will be working on, is to really moving forward is to try to maximize on my one trade that I look to take, because now I'm focusing on limitations of trades I'm taking. So maybe take off a contract, 2 contracts at a certain not break even, but a certain profit target area and getting out, whether it's at the 20-point thresh or if I'm looking to take out a little bit more, at a different area, and then allowing the rest of it to run. So what I'm trying to say is, we'll take a look at this example right here and say this is an area of demand. Now this happened during London session. We're not looking at any given time period. I'm just showing you setups because they can take place at London session. They can take place during the New York session or pre-market session. Now Asian, when it comes to trading the indices, it's a little different because the volume's not there. You may want to kind of focus your mind on maybe some means of commodities or maybe even currencies, because the indices aren't really, I'm not saying that there won't be any movement, but most of the volume in which pushes the indices is going to come out of London into the New York session as well. But we'll treat this as if this was a demand setup right here, in which it is, because we got the market breaking structure higher. This happened on the 22nd, no, actually the 23rd of September. The market pulls back to this key area of demand. This is examples. I show these examples, but I also post trades that I take over on the Discord community, and I break them down. So you know, if you are an elite member that's part of the community, all right, those that are supporting the efforts as me as a content creator and me providing just rewards, perks through the YouTube tier platform, to where you're getting the trade breakdowns, the ones that I post over on the Discord community. You understand these trade setups that I'm taking. The ones that I'm taking to where I'm showing over on the Discord, I break them down so you grasp an understanding of why I took those trades, okay? And I go into detail about them. So anyone that's interested in becoming an elite member, the link is down in the description portion of the video for you to join, okay? And it's very inexpensive. It's only $6.99, but you get a boatload of trade breakdowns and the video playlist. You also receive a great video that I did covering market structure for all those that are struggling with being able to read the market. But the market pulls back to this area of demand, and all we do then, I mark this up off the higher base chart. Okay, I'm not ever going to stop showing example after example and going through the strategy, because, you know, just like anything else in life, the more that you go at showing someone or a group of people what you're talking about, eventually catch on. So the market pulls back to this key area of demand here, and then if I scroll down or move down to or scale down to a lower base chart, you'll see what I'm talking about getting into great opportunities or setups. This is a beautiful area of demand where the market was breaking structure to the upside, aggressive buying, and there's a small gap. That's really the key to these high probability setups is looking to see, is there a unmitigated imbalance or gap back at the zone. That's what makes the difference of these setups being high or low probability to me. So I moved down to my lower base chart because now we're getting down to the nuts and bolts of being able to execute and get into the trade. Where to? So if the market is pulling back, this big, larger rectangle box, that's that 120 range demand zone. And that's all we're doing is using a higher base chart to find a higher base zone, scaling down, moving to a lower base chart to define a smaller base zone inside of the larger base zone. Okay, because that's what's called confluence. All right. So within the higher base 120 range zone, I'm looking to see if there is any area of demand. If I blow this up right here, inside the box, the larger box, there's an area of demand right here. Okay. We see the market pushing up, breaking that structure, taking these highs out right here. So we have an area of demand resting right here. So I could draw that or mark it off by simply doing this right here. And if you're struggling to understand how to draw the zones, please go back and watch the videos, because I have 2-3 videos where I talk about what I do as far as marking up zones, how I go about doing so. Now, if I carry this all the way across, make sure I draw this 100% correct. The bottom right there. Okay. Now, if we really take a look at this, this is a demand zone, and I'm expecting some reaction right here or rejection right here. What I like to do then is, once I've marked off and find the higher base zone and then the lower base zone on the smaller base time, or it's not time, but on the smaller base chart, the 24 range chart, which is my execution or my entry chart, I have a zone within a zone. Now, at this point, most of the strategy is almost complete. What we're looking for now is the rejection piece. That is the break and close above the last down bearish candle. The break and close is going to be right here at 19,967. But if you pay real close attention to what happened at this zone here, and I want you to see where the market came back and went right below it, right below that zone by a tick or two. Now, the zone is invalid at this point, but there's still opportunity in which this is a demand zone that it slightly broke through. Why are they doing that? You have to understand, it is their goal to stop traders out. So they're looking to stop these buyers out right here. Okay, that was a valid high probability demand zone, a valid low probability demand zone. They broke right slightly below it 1 or 2 ticks. They want to stop traders out. That is their number one goal, is to create areas of liquidity and run through those areas of liquidity where buyers and sellers are stepping into the market. Buyer stepped into the market right here. They were swiped right below that area, right below the demand area. And then what do they do? This is a liquidity sweep or liquidity grab area. Liquidity sweep. Right below that area. They grabbed, stopped, and then now they're looking to do what? Make a push to the upside. If we go back to the higher base chart, we'll see that when the market came back there, it's still inside of the higher base zone off of the higher base chart. Okay? There is still enough momentum that took place right here, or enough buying that took place right here. So if they can grab some liquidity, more than likely they're still going to be fueled after grabbing liquidity to push the market in the same direction or the intended direction to go higher, in which they did. So they went from down here to 19,955 and it broke higher, breaking above these highs right here at 20,165. So all they did was grab some liquidity on a smaller base chart after going down and moving down. All right, at an area of demand on the higher base, the lower base chart. They reacted, but they never broke the higher base zone to make it invalid. You have to understand things that are going on. And then they went back up and grabbed liquidity on the top end. So they grabbed some liquidity to fuel them to push higher to take out liquidity on the top end. That's how they like to move. Taking liquidity out on the top end, taking liquidity out on the bottom end, but they're strategically going about doing this. Again, going back to the lower base chart, we can see where there's a higher base zone on the higher base chart, lower base zone here. They grab a little bit of liquidity to push the market higher. If you see things like this take place, and we're still inside that zone, say for example, then you can still look to take a trade going long, but this turns from a demand zone where they broke slightly through it to a liquidity setup to where now they're grabbing liquidity at a valid demand zone where there was a gap at, where it was high probability to push the market higher. So the market reacted right here at the swipe of liquidity at 19,955, and it goes all the way up to, check out this high right here at 20,165. That's a big move to the upside. Picking up 20 points on a move like that or more would definitely get you or earn you that $100 a day scalp to build your $500 small account. So again, you could take $500 and watch it grow by month end to $2,000 or more. So by the end of the month, you went from having originally $500 and now maybe you have resting in an account a little bit over $2,000. Okay, and you do that 2 or 3 months, and then now you're up, $6,000-$7,000 in that account. Originally from where you started off at. Okay, think about it. Where you started off at just $500. Now you could possibly start trading, maybe if you want to, a contract on the E-minis or two, depending, and that's how you grow an account. Or you can stick with trading the micros and continue allowing that $500 investment to now make you, all right, or gross you $12,000 by month 6. Start with $500. Now you're up at 6 months later, $12,000. Okay, because now you're taking it from $500 every single month to where it's grossing you $2,000 by 6 months. Now you're making $12,000. Okay, that's a big, you have to see the growth there. There's a nice return on investment, right? And now you can position yourself if you want to trade more contracts or step over into the E-minis and trade that way. Because the tick size the tick value size per point or per movement, okay, is going to be higher when you switch from the micros to the E-minis. It's 10 times more when you switch to the full-on E-minis versus the micros. But, lots of people still like to stay and trade the micros just for some, I guess, a means of security or measure, because they feel as if they're not having to risk as much. And by doing that, they feel like they have more control over their funds in trading, and they feel safer and more secure of not having to risk, like I said, leverage as much as the market as if you're trading the E-mini. So, just figure it out, how you want to trade, if you want to make that switch or not once you start growing your account. A lot of people like to stick with the micros. Okay, and nothing wrong with that. Truly, there's nothing wrong. And the same thing right here, I just want to show you, as another example. I mean, if I'm looking at structure right here in the market, I'm telling you, this is important stuff that you need to pay attention to, is really identifying on a higher base chart what direction truly trade. That's where it all starts at. And then you start moving down, like running from, it's a top-down analysis. moving from a higher base to a lower base, but understanding, because as you're working down from a higher base and working your zone, you're working through the strategy, okay? And part of that strategy is understanding structure. So as the market moves down here, all right, as you can see, it starts to do what? It starts to break structure back to the upside here. Now, if I'm looking at these multiple zones, each time it breaks structure, pushed up, broke structure. Okay, pull back, broke structure again. Now, there's two zones after this area where the market broke structure, these highs right here, back to the upside. Right here and right here. Okay, so it's like, where would you expect, the market to react at and continue pushing higher? Well, the first zone we're going to take a look at because it's the closest one to us. But we also got to be careful, be mindful that this leg right here where the market pushed up and broke above these highs right here after that break of structure, we have to be mindful. Okay, this quite isn't the origination area. That happened right here. It's back down here. We got the first push to go higher. All right, but this is around the 50% area of a fib retracement. I'm not trading fibs, but it is on a pullback. It's about the 50% area of this leg right here. Okay, so yeah, I'm gonna give it a shot and take a look at it when it gets there. Is it going to react at that area? If it does, and I can find a zone within the higher base zone that I marked up right here, all right, as I scale down to my lower base chart, then I'm going to wait for the reaction, confirmation, rejection, break and close of the candle to go long. Now, if the market gives me that and I collect on my 20 points here, okay, but it doesn't come up here and break this high, I'm going to be very mindful, because now it looks as if, okay, it reacted at this zone after making this low, but it made a lower high, okay, but then it pushes lower and then we have a zone below it. If it taps into the zone, can it react here? Yes. But I'm going to be very cautious, like I said in the early part of this video, because now we did not, okay, after tapping the first area of demand, break any higher, meaning taking out the highs right here, okay? Because if it did, then what would happen is right here, it'd come back, push higher, break above these highs right here, and now we got another structure break. We didn't. We made a lower high just to come down and make a new low, a lower high to come down and make a new low to test this area of demand right here. So I'm going to be very curious and very cautious at the same time when it gets here to expect and know that the probability of it actually reacting strong here, it's probably going to be a lot lower because it didn't prove itself right here. So just kind of pay attention. That's why I said reading the market is imperative. Okay. So anyways, I just want to cover that today. It's extremely possible to anyone out there who has any kind of doubt of taking a small account, even $500, and making $100 on the day trading micros. You can definitely do that. One trade, if you just picked up 20 points, is going to give you 80 points on 2 contracts. And it's easy to pick up that, that $100 if you just, again, picked up a little bit over those 20 points. All right. So, and again, at the end of the week, you've done double up 100% return on your initial investment of $500. So you put in $500 and you made back $500. You keep that systematic way of doing that week to week. The key to it all right, really is looking for high probability setups, but it is all about being patient and taking the same setups, okay, that are high probability based, and being consistent week to week, day to day, or day to day, week to week, I should say. Okay. But that's all I want to do was share that with you guys today. Anyone who's lacking any kind of motivation, that's just not clearly being able to understand why they may be taking losses, because you're probably, for one, you're probably using some lower base chart to be able to just scalp real quick. And you're going to struggle more to get to growing an account that way if you're taking small, very small scalps off of lower base charts. This is why, you may have to wait for it to unfold on a higher base chart and for the market to pull back to a zone on a higher base chart. But 9 times out of 10, when it hits and comes back to an area of supply or demand, and it's a high probability area, it's going to react at that zone, at least the first zone for sure. All right, because the market again has already shown where it's making higher highs and higher lows. It broke and made a new high right here at the breaking structure here. The same thing that it did right here, just to pay close attention. When the market pushed up here and pulled back and broke structure right here, when it came back down, there was no demand area right here in this area. The first demand area was right here. Okay, so look what happened when it came back down to that area right there. It reacted. Again, this is a London session. It reacted because after it broke structure, it made it a new high. The first demand zone was right here. Okay, volume is in the London session as well. It reacted and broke up and broke structure again. right here, took out the highs. So when it came back to this area of demand right here and it made a new high, the probability of it reacting decently there took place. Down here, not, because it didn't break this area here. That's just being able to, again, follow price action. But that's all I want to share today. Hopefully that kind of makes sense. Get yourself in the mode of understanding structure. And that's why if you're not an elite member, you may want to strongly think about becoming an elite member. It's only $6.99. The link is down in the description portion of the video. It's right below the Discord link, okay? Click on that. 2 tiers will pop up for $6.99. You can join and you get the trade breakdowns. You get the video where I cover market structure. You get the video playlist. So if you want to have or gain some, some justice for yourself in a sense of understanding better about setups, about what to look for, about where to place profit targets at, about where to place stop losses at, and understanding about market structure, because I did a market structure one-on-one video there. You can watch that video, okay? Again, it's only $6.99 if you choose to or not. But for everyone who is a current member, is part of the private community, thank you for supporting my efforts as a content creator. And that's just something in return of these videos that I make privately too and go in more detail about, you gain access to. And you gain immediate access to it if you become a member. If you're not a current subscriber, I would highly recommend doing so. Make sure to turn your post notifications on so that you can gain access directly, or I should say, gain immediate access or knowledge and awareness of when I drop a video, okay? Spend time watching the videos. You can actually take pen to paper, take notes, and you can find out and walk yourself through if you spend time understanding. The answers or any question that you may have are in the videos. There's a lot of video content, but it's there. And I make these videos for a reason, because I continue pushing content out, because it's all about helping individuals. That's the reason why I could have done a one and done, couple video series and been one and done, and then people will still have 100 million questions. So this is the reason why I keep going over the same concepts, because I want people to understand, but just as well, we got newcomers that are coming to the community. So this is the reason why I continue doing it. So hopefully these videos help out. If they do, please take the time by not only subscribing to the channel, but dropping a like right now. Go ahead, please click on that like button. And, if you found value in today's content, all right? Appreciate it. I'll see everyone in the next video. Make sure to have a safe and, relaxing and great weekend. I hope everyone is. Take care. I'll see you in the next one.